Hey guys, welcome to this week's video where we're talking with Mark from DPN Finance, all about your finance needs, everything you need to know during COVID when you go to refinance or borrow money, everything you need to know. So Mark, welcome to our YouTube video for this week.
Thank you, Nathan, for the invitation. It's great to be here.
All right, mate, you good to go?
Looking forward to it.
Mate, ready and roaring. Let's do it.
Nothing like another Zoom meeting.
Well, hey guys, welcome to this week's video. And I thought that this would be a really good time to talk about finance. And for many people out there, whether you've got an investment property or you want to buy an investment property, or you're currently looking at your options for maybe refinancing your home loan, or you want to get a home loan, and you may have been affected or you're not affected, but it's a great time to talk about finance and how that shapes up for you. So today we are joined with Mark Moenting from DPN Finance, and the few things we're going to cover. We're going to do a little bit of a get to know about Mark, and hopefully you'll see Mark throughout the video and get a real good feel for who he is. And we're going to do an update on finance, on the current investment and commercial investment rates, and we particularly also want to focus on the broking model, how that works over going direct down to, say, for example, Commonwealth Bank, walking in and strolling in and, hey, say, go and give me some finance. The next thing we're going to cover off as well is we really want to focus on finance during the COVID pandemic period. And in particular, I want to look at how government grants would have impacted you maybe getting finance, or how they will impact you getting finance. And the other thing as well is how ATO debt and payment arrangements can also affect you on getting finance. And lastly, the last thing we're going to talk about is for those who currently have a mortgage and having a mortgage holiday, what the implications are there for you now, but then also the future and the bigger picture with finance. So ready to go. So Mark, welcome along, mate. Thank you for joining us. And I'm actually going to take your shameless plug for you, because I've known you for so long that I think I can spell it out quite clearly. So I've known Mark now for 10 years, and it doesn't seem like that long, does it, Mark, really?
Definitely not.
No, but time flies by when you're having fun. But Mark's actually been operating since 1996 and holds an Australian credit license. And his team at DPN Finance have been helping, I guess, a lot of my clients, but also helping a lot of local and Australians with some smart and competitive finance options. And he's been doing that for more than, that's 20 years, right? Mark, well, I got to say, one thing that really drives or, helps drive me towards actually working with Mark is that Mark is passionate about delivering exceptional customer experience using market lending digital solutions and just really upholding a strong commitment with his customers. And it's about providing finance solutions that meet the client's customer needs, their circumstances, their objectives, whilst also, for I guess his side, upholding, the legal obligations to act in the customer's best interests. So did I do good, Mark, then?
Perfect.
Did I plug you well?
Mate, that's fine.
That's fine?
No, you personalise it, said it.
I didn't even put any lies in there either.
Nope.
Well, mate, thank you for joining us. And like I said, we are talking all about finance today. So tell us, what's the current interest rates out there at the moment for resi? When we say resi, we're talking about residential properties, and then also your commercials.
Thanks, Nathan. Again, appreciate to be welcome on your program, and see if we can give a few tips to your clients. So interest rates is interesting topic, so to speak. The residential rates are obviously low. The cash rates are 0.1 and still 0.1. The RBA is holding tight, as you know, with the current economic climate. They're trying to keep rates on the low. The RBA's got subsidised funding for the banks to lend out to especially small business. I'll talk about that later, but the resi market is very flat, as in low benign rates, and that's what's causing our little property market to grow because people are feeling very confident to go out there and borrow money at extraordinarily low rates, and that's inflating the price of the asset. So at the moment, the variable rates are in the low twos. You're hearing rates under 2%. There is what you call online lenders that are selling at the 170s to 2%ers. Fixed rates, 2-year rates are under 2%. But there has been a trend of rates increasing from 3 to 5-year rates, which means that the forecast short term for 2 years is 2%, but getting above that, it's getting to 2.5% and 3%. So the wording is that the current economic crisis, as it is, will end. And I think I'm pretty confident about that it will end. And rates will start ticking up once wages increase, employment comes back online, and therefore your rates do go up with it. And rates going up means that the market is growing, wages are growing. But short term, rates are low, the appetite's high. So you can save a lot of money on your existing mortgage. And when you're buying an asset, you can lock it in for a good rate. Some of the rates are at 1% or 2% or below.
So thanks, Mark, for sharing that. I guess it's all about confidence really at the end of the day. And it sounds like really we're getting to the point in the market where the banks are predicting that in 1 or 2 years' time, there's going to be a lot of confidence and a boost in economic stimulus. So, I guess stimulus is what's helped us, survive and go forward. Where we're at now, where we're going to be in 12 or 24 months' time.
And again, the appetite is that your rates are low. So people do have that surety and that certainty around rates, especially fixed rates. The fixed rate appetite at the moment is way above the average. So people can go in and lock in a lot of debt in a good fixed rate between 3 or 5 years. It's still relatively low, but it just avoids any future shocks if rates do go up on the variable side. And again, we're working at home now. Buying a home is not just buying a home, it's buying a home office. So the trends and lifestyles of people are changing. And so when you get to the commercial market, you mentioned about rates there. Rates are obviously a lot higher in the commercial market, but the banks are offering special rates for a lot of existing and new clients, especially unsecured debts, where they've got subsidised funding from the RBA. So if you actually look on your online web accounts, you'll see there's a link there saying offering you a secured, unsecured credit facility. And the rates can go from 4 to 7.5%, for example, but you got to be wary because they charge fees and line fees. And when you add that into the headline rate, your rate's probably a lot higher than what they're advertising. And that's where they speak to yourself to make sure when they're borrowing on a commercial side. But the appetite for lending in small business is huge. The banks have this cheap money. They need to lend it to make money on it. The RBA is giving them this opportunity to help the small business. There's been a great appetite in industrial storage areas. A bit of feedback from one of our non-conforming lenders is that with the advent of home businesses, people need to store their stock somewhere. So they're finding that people are buying sheds up, storage sheds. The tradie's busy. He or she's looking to store their equipment in a shed. So that the appetite for industrial property is quite high in some areas. So when you think that you're at home, you got to stick stock somewhere. And then if you're working from home, having a house that caters for your home business and your children or your lifestyle, people are willing to outlay a bit of extra money for that reason because they might not see themselves working in the city or a major hub going forward. So there's a lot of changes that happened over the last 2 years, but it's reflected in prices and rates are obviously helping that. But again, rates do go up and down. I'm not a rate expert, but you got to check in with your broker or your lender at the time.
Yeah, no, that's good. So probably leads to my next question. Some really good information you provided us there, Mark, already. So, okay, what I don't understand is, and maybe you might be able to educate us from a broker's perspective, is why would anyone go direct to a bank anymore? Why is someone going to stroll down into CBA and go, hey, I'm here and I want to, get some finance from you guys? Well, why does the broker model work?
Well, the broker model work at the moment from a market share point of view, brokers deliver over 60% of the mortgage market. People wouldn't know that, but unfortunately, out of that 60%, 90% it goes to the 4 major banks. So what it is that the brokers are an alternative distribution fields, but the banks still get it by their size. But a customer traditionally likes walking into a branch. But as you know, that when I grew up, I had my first job in an ANZ branch where I had 8 bank tellers. Now, if you go into a branch now and find 2, it's amazing. It's a completely different experience, and I'm sure customers feel that. But the traditional bank branch bricks and mortar is disappearing, especially with the advent of COVID. That branch networks are under pressure because they're run like a business. So people going into a branch want to go and meet someone. But what happens is that brokers have traditionally taken over that customer experience position, and they're mobile. They'll come and see you. They'll meet you in a coffee shop. They'll meet you in Zoom now. They'll meet you at your house. It's changed the whole landscape of the way lending's done, and it's only growing based on all the numbers. So the other thing that a Commonwealth Bank will sell a Commonwealth Bank loan, an ANZ will sell an ANZ loan. A broker is under best interest duties is legally bounded to offer you a range of products. So we get you to get junior banks, like you can go and speak to My State Bank in Tasmania, which you probably never heard of. Or you've got your Bendigo banks or your Bank of Queensland. These second tier banks offer great services and rates.
Or even I know, like with some of the banks, I know NAB had, and let me know what it was, but I know some of the banks have had their own other, banks that are, rebranded a different name. So, and they often have a better rate.
Correct. Ubank that's NAB owned. That's an online bank, but it's not a broker bank, but you can go online. So there's 3 options. You go to branch, you go online, do it all yourself, or you get a broker to offer you a range of products. And under the rule, when the Royal Commission came in, they brought in this best interest duty. So customers and brokers act in the customer's best interest, offering the best alternative product based on their needs and objectives. And it's presented in a document that they have to read and choose. Now, our job is to research that market and make sure that we give you that options, and then you choose. Now, you don't have to choose it, like it's just a free service for the customers most of the time. But customers love the opportunity that they can have all their products given to them in one nice, easy document, but knowing that the broker is experienced to be able to offer that service and bring 30 or 40 different products to the table. Now, the other thing that people don't realize is there's 4 major banks that own 90% of the market, but there's probably 20 or 30 other other banks or funders that represent the other 10% of the market. And that's a key point. And a lot of those are what they call non-conforming banks, lenders, and they help out a lot with the self-employed market, which traditionally the banks have run away from over many years. And businesses always starve for capital. They need money to grow.
So, I mean, really, because the thing is, well, like when it comes to the banks, it's about their risk appetite and what they want to lend, who they want to lend to. And
Correct.
the way I say it to my clients is that if you go and see a broker, and a broker who, you want to get, just not any broker, you want to go with a broker who has experience, knowledge, and really knows the whole range of banks that they can use. And when you do that, it gives you that ability to actually get the right product that suits you and your business, instead of having to, if you go down the bank yourself and say, for example, Commonwealth Bank doesn't want to lend to an accountant. They might not have an appetite for accountants. They just might think, well, we want, much more probably interesting people who have personalities.
All accountants are wonderful.
Whatever, pick on accountants and lawyers. But if that was the case, and I go down there and apply, and then I get knocked back because that's not their appetite, that's also going to look bad on my credit rating as well. So really, I think as well, you guys are really also helping protect that credit rating for a borrower.
That's a very good point, Nathan. There's everyone has a credit score, and there's a thing that's just been brought in recently called a clear credit reporting, which means that if you miss repayments or whether you make repayments, it gets recorded on your report. So if you've got a score in the 500s, that's low. If you've got a score in the 800s, it's high. So everything you do from a credit aspect, every privacy act, like when you apply for Telstra or if you apply for an unsecured credit card, or it all goes on your report. So as a broker, we do not want you to submit an application unless we've done all our fact finding and making sure we've done the best research to give you that. Now, if you go to the branch and the branch just puts it in there and goes loans declined, and just move on. But are they taking that level of interest in your loan to make sure it's getting approved? I don't know, but that's up to each person. But from our point of view, it's very important to protect that credit rating, and it's critical for your trade. But clear credit reporting is about keeping your repayments up to date. So if you're missing repayments, it can affect you down the track. So a lot of lenders are coming on board with it. It's growing in stature, but it's something that you've got to consider highly going forward in this digital world that data has been shared across all the platforms. Yeah, it's a big consideration to take when you're choosing a broker or a lender.
That's right. So Mark, leads on to my next question: finance during the COVID period, and I bet you have seen quite a few challenges. And I'd love to learn, and for my audience, I'd love to learn, what does a borrower, face compared to a pre-COVID period, and just to remind you as well, just to particularly looking at how receiving government grants, is that like people taking these grants, so they almost shot themselves in the foot by taking them. And also, I'd love to know about how having an ATO debt, which could be lingering, affects getting your finance as well.
Good question. Now, with COVID, you'd like to think that everything's a bit negative, a bit nervous and that, but the lending market has gone boom since September last year. I've never seen anything like it personally, like the volume of people that came out post first wave of COVID last year. They dropped rates, policy opened up, and people just went out and shopped. So there was an extraordinary amount of investment in housing, owner-occupied and investment. Small business had their loans come through. The holiday repayments meant that people could stay in their homes, and they came out of it and started going back to normal. But what they did is keep their prices grew, and their appetite to invest and probably secure themselves for the future was a big driving force in growing. And so that's been going since September, and we're going on, wow, can you believe it, a year, and we've had phase 2 come in. But the banks, to give them credit, that holiday repayments is just a huge support of small business and families across Australia. And it gave them the opportunity to grow. And a lot of people got out of repayments. And then the second phase has come through. A lot of people took the grants, took the JobKeepers, and now recently they got the New South Wales government grants and the JobSavers. Now, the impact on them is two ways. One is that, did it sustain a business short term? Two, did it subsidise income for a great business, and now it impacts on their loan applications? Well, the banks lent through that whole period. All they do now is, if you've accepted $20,000 in grants or government assistance, they'll just take that off your income, and they'll work out your net income. So in general terms, some lenders are accepting it nowadays, but they mainly discounted it through the period. The second thing they're looking at is your BASs. That's why you got to have a great accountant like NGR to make sure that the BASs are done correctly and they're up to date. Because if you've got good financial data and good financial management, it's very important that if you're asked to borrow money and you can produce all those documents, the accountant is crucial. So I can't emphasize that enough. And I understand how you work with your clients, and that's the reason why they can have an application done quickly, because the information is provided from our experience. And so from that point of view, that the lenders are still looking at, but if the BASs are showing no turnover, there ain't no turnover, so it works both ways. There's mitigants for the support, but the banks aren't not lending because of that. They might discount it, they might reduce it, they might adjust for it. There is policies there, but they realize that this is a substitution of pre-19 or pre-20 income. So they're being a bit more pragmatic about it now, but it's not to be discouraged. Like, they're not saying decline. It's, again, that's why the brokers are really good, because there's a lot of lenders that have different variants of policies. So ATO debt last year, as you would know, everyone went on a holiday repayment. And so they all got a 2-year or 12 months, 24-month repayment plan. So ATO debt was taboo, but it's not now, because the economic environment was allowing that. It wasn't it was about keeping your business going. So now, if you're a business owner, you've got a debt there. It's just an expense, but it's not an expense as in I don't have the cash flows. It was just, that was my last year COVID impacted tax debt and I'm just paying it off. Now, if your accountant sits there and supports you and goes, this customer's growing and their BASs are growing in value and they've got a tax debt, it's not taboo. So there's lenders, again, that will consider that. The other option is that if a customer's got an ATO debt that's expired, they have to pay it out. There is lenders out there that will absorb those ATO debts. Again, some people don't want to pay ATO debts, but there is mitigants there. And if you've got equity and you've got cash flow and you need to extinguish an ATO debt because you've been called upon, there's nothing wrong with that. It's just an option. But as a broker, we've got to do a complete review of your needs and objectives and make sure the financial position is clear. So there is lenders that will look at it, but there's no guarantees unless you see a broker or a lender to cater for that.
Yeah, that's some really good tips there. And yeah, so I mean, that really, I guess, covers off. I mean, even those mortgage holidays. I mean, so many people would have taken those during that period, but it's good to know that, you know, you're not going to be punished because you did take a bit of a break. I guess it probably comes down to as well, like communication with whoever you owe money to, and particularly whether it's the bank, if you're struggling to repay.
Nathan, I think just nailed it. Communication is where people go wrong. Anytime something goes wrong, and I'm sure you've had this conversation with your clients, is that you need to get to me before you really need to get to me. So tell me what's happening so I can plan for it. Same with lending. If you go, I'm going on a holiday repayment, do it sooner than later, and then when you can come out of it. The rule of thumb was that if you went on a holiday repayment for 3 or 6 months, they wanted to see you pay a mirror amount of it. So if you went for 3 months holiday, they wanted to see 3 months repayments going forward. I remember last year customers just took holiday repayment because they wanted to, not because they had to. The banks just offered to them and they said yes. And it's like impacted their loan. But at the time,
what would have happened as well, like if they did take that holiday, the interest continues to accrue, right?
Correct. That's a good point.
So the loan and you're not paying, and
everyone thinks there was a magic solution, but you've got to think there's a thing called compound interest. So your debt was increasing, so it'll extend the terms of your loan. Now, it's not traditional, but APRA gave the banks, or the lenders, I should not say the banks, the lenders approval to do that, to let the people go. But really, you are paying it back. So the advice was, if you got the cash, pay it off your loan, put it in the offset, whatever. But if you couldn't do it, it just gave you the ability not to lose your home or lose your business. But yeah, you had to capitalize the interest in. So now people are coming back on board, renegotiating, they've got to pay down that debt. So it'll extend their term or extend their principal. So it is true that does happen. And like anything, if you don't pay, it just compounds, it doesn't disappear. And the same thing when people took money out of their super and used that to supplement. I read an article the other day where we're chomping away, knocking down credit card debt. So I think the Australians are much more conservative these days, that they're actually managing their debt a lot better. But the rates are low, but people are still buying and they're still shopping online. You need the home loans there, but the home loan facility with offsets these days gives you a lot more flexibility than it did traditionally years ago. I grew up in an environment you paid your mortgage. That's how
and that's what you have to do, is that you have to pay your mortgage, and if you don't pay your mortgage, you're in trouble. And nowadays they give you a holiday repayment. So the traditions of yesteryear compared to what's available, that's why you get on the phone, communication with your accountant, your banker, your lawyer, whatever you have to do, and ask. And the lenders are open, they're there, they don't want to sell people up, like, because that's where everyone thinks you're not going to make a repayment. But getting back to your credit history, is you've got to protect your credit history, make your repayments. If not, get a letter from the bank saying you've got a 3-month holiday repayment. Because people go through divorce, forget about COVID, divorce, financial hardships. If they're in a bad relationship, their children, it could be guarantees. There's so many reasons what can affect a customer. And the lenders are compassionate, and they've shown over the last 18 months, they're here to support everybody.
Yeah, no, yeah. I feel that's definitely the case. So, well, that's good. Well, thanks, Mark, for coming along. and giving us your words of wisdom. And I do strongly suggest that if you are in a position where you are looking to refinance, or in a position where you want to borrow money for an investment property or your family home, that you contact Mark, and we'll share your details, Mark, on this YouTube channel and also on our website, so our clients can get in contact with you and anyone who watches our video.
Thanks, Nathan. Really appreciate your time, and again, thank you. And it's a great relationship, and appreciate you giving me this opportunity to chat today.
No problems. All right. Thanks, Mark.
Cheers, mate. See you guys.